Today we're going to talk about Olympus DAO. I'm going to talk about two things. First of all, why does the price keep dropping so much? The price has dropped like crazy. I'm also going to talk about when I plan to get back in. That's right, ladies and gentlemen. I am no longer in Olympus DAO. Many of you know that. You probably saw this video where I said that I was selling out and I showed how to unstake the tokens. Now, I plan to get back into Olympus DAO. I've always planned to get back into Olympus DAO. A lot of people told me that I was making a mistake getting out because they said that if I would have just stayed in, the high APY percentages that was paying out at the time, what, 8,000% or something like that? Yeah, 8,000%. They said if you would have just stayed in, then you would have made more. But the reality is that would not have happened yet. Could happen eventually, but it would take a very long time. I understood that because I understood what was going on. I understood the goal of the project. First and foremost, most people did not understand the goal of Olympus. The goal is literally to drive the price down, meaning it's programmed in. The high APY was just about attracting attention to the project. It was about bringing in investors early. It was about attracting liquidity through the bonds. It was building up that treasury. So they had to have an APY. But long term, the whole goal of the APY was to drive the price down. Drive the price down faster than the APY could expand is my personal opinion. And I think I can prove that. Now I'm going to tell you right now when I plan to get back in, but first let me just go ahead and shock you. I think Olympus DAO is going to end up going down pretty close to $1, and I think I can prove to you that the protocol is designed to do that. If you come over here and I'll show you that, and then I'll talk about one caveat or that's important to be aware of, and that is going to sort of determine when I get back in. But let me just show you something for a moment, quickly. This is their video on their website. They've had this video almost from the beginning, probably from the very beginning. Go ahead and watch this video and listen to what they actually say. This is on their white paper.
So what is Olympus DAO? How does it work? And how is it able to produce such high yield returns? First, let's start by explaining its place in decentralized finance, or DeFi. Cryptocurrency, especially DeFi, is quickly becoming a powerful digital economy. Stablecoins are cryptocurrencies that are pegged or directly tied to a stable currency such as the US dollar at a 1-to-1 ratio. They currently dominate the crypto marketplace, but because they are pegged to the US dollar, they are still vulnerable to the inflationary policies of the Federal Reserve. Recently, there's been a wave of algorithmic stablecoins seeking to emulate the dollar peg with less than a 1-to-1.
Please keep in mind, they actually say that the value or the purchasing power of the dollar has been going down because of inflation from the Federal Reserve. Just a heads up, what do you think the high APY is? Currently now it's 5,000%. It's a form of inflation, which is driving the price down. But the question is, why do we want the price to go down eventually? Let's keep watching the video.
To 1 ratio backing. Olympus decided to take this idea one step further. What if we could achieve stability while still maintaining purchasing power by using a floating market-driven price? So what is Olympus DAO?
The whole goal, I hope you caught that, achieve stability, not some sort of crypto asset that outperforms the rest of the market, just to achieve stability.
Floating market-driven price. So what is Olympus DAO? A reserve currency protocol based on the Ohm token. It aims to become a crypto-native stable currency. It will accomplish this.
What's the goal? To be a crypto-native stable currency. Not a high-earning crypto asset, just a stable reserve cryptocurrency.
It's the same way central banks manage their currencies using reserve assets, but Olympus DAO manages Ohm using crypto reserve assets. But contrary to central banks, where decisions are made by a select few, all changes to the Olympus protocol are voted on by the community of Ohm holders through the DAO. So how does it work? The Olympus protocol uses its treasury to back all outstanding Ohm tokens. Currently, each Ohm is backed by the stablecoin DAI.
Okay, so this is where you got to pay careful attention. All Ohm started out backed by DAI, and the whole goal is to keep the tokens backed by an asset that over time will go up in value essentially faster than the dollar, maintain their purchasing power. That's what the goal is.
but Olympus is already securing new partnerships to add additional cryptocurrencies to the treasury. The protocol functions to stabilize Ohm's value. When Ohm trades at a value above its backed assets, the Ohm protocol mints and sells new Ohm, increasing supply.
Okay, that's important. Anytime there's tokens being sold, that puts downward pressure on the price. Right there, the whole goal is to mint more tokens and sell anytime the price is higher than the backing. Anytime the price is higher than this number, the goal is to print more tokens and to sell them into the market. And when that happens, it serves as a mechanism to help drive price down.
When Ohm trades below its backed asset, the Ohm protocol buys back and burns Ohm, decreasing supply. This allows the Ohm token to achieve a stable floating value while never falling below the value of its backed assets. Ohm also expands its treasury.
Okay, so I want you to go back and look at that. The goal is to have a stable floating value. Stable floating, meaning the value is not going to stay exactly at $1 or exactly at $5. It's going to fluctuate. They know that, but they want it to have a stable fluctuating value while having a hard asset that has its backed up, at some sort of minimum. In this case, $1 per value is the example they used. Now, I want to show you right now why I believe the price is going to ultimately go down to $1, because a lot of people don't understand this. And then I'm going to show you how to use these exact same mechanics to see when we start reaching stability and when you can start buying back and when I'm going to start buying back into Olympus DAO. Now, here's the thing that's important for you to understand. I also got into this project early on with the whole goal of making some money. When I saw the project was going up really, really fast, I understood that the market was outperforming the intended protocol. And that's possible in the short term with any protocol. If the protocol functions properly, it's going to do what it's supposed to do. In this case, the whole goal is to drive price down every time that the price per ohm is higher than the amount back. Now, if you don't know where this number comes from, it's the market value of the treasury divided by the circulating supply. In fact, we should get pretty close to this number. I'll do it just so you can see because I want to make another example for you. 661,354,908 divided by this number here, 7.6 million basically. 8654, pretty close right here. There's some sort of calculations wrong somewhere. Maybe I missed a number. But either way, roughly $86 per ohm. But here's what happens. Every epoch, the protocol looks and says, oh, this price is higher than this price. Let's expand. Well, every single time that it expands, what happens ultimately is there's more ohm. And if there's more ohm, then the price per backing is going to be lower. So let's just say instead of, for example, I'll show you, instead of 7.6 million, let's just say there's 8 million. And you will see that the price would be lower. So divided by 8 million. That's not even a significant increase. And look, price per ohm, backing per ohm is lower. So what do you think is going to happen? It's going to keep expanding. And every time that it expands and sells, over time, it's going to keep driving that price down. But the price, as long as the price stays higher than the current dollar amount backing ohm, then what's going to happen is it's going to keep printing more supply and it's going to keep selling. In fact, the protocol will keep doing that until the price drops below the backing, which is not going to happen until we get somewhere closer to $1. So it's going to ultimately at least maintain $1 per ohm. And if you look at the recent OIP that was released, this is a little proposal that was 23 days ago, was done by the development team. They know this. Their whole goal is to lower the APY over time. They're about to get over here to this 500 to 1,000% APY. Right now, Ohm pays out about 5,000% APY. One reason to lower the APY and to gradually settle into this is because ultimately what's going to happen is the price and the backing, these numbers are going to get closer and closer together. And you want that to happen kind of gradually over time. So that's where we're headed. The backing per ohm will continue to go down, and the price is also going to go down quite a bit. But when you see these numbers start to get closer together, then you're going to start seeing a little bit of price equilibrium. Now, keep in mind, this treasury has the ability over time to continue to go up. Even this is the real value of the treasury. like the US dollar value of the treasury. As you can see, it's stable, but it's going up over time. Right here, you can see the market value of the treasuries dropped. That's because the crypto market's been down a little bit, but that's okay because over time, those of us in crypto know that this definitely is going to outperform the US dollar. The backing per ohm may stay at some premium, but I think that premium is going to be under $10. And I mean, over enough years, if this protocol is highly successful, it's going to be very close to $1. No, over time, over a long enough period of time. But I believe that this, with the yield slowing down, it's going to take a while for that premium the premium is going to stay higher longer. But the main thing I'm looking for is I'm looking to see what happens when these two numbers get closer together over time. Now, if I start going into Olympus DAO, I will definitely announce it to my Crypto Passive Profits newsletter subscribers. So go down in the description and be sure to subscribe to our Crypto Passive Profits newsletter. It's absolutely totally free. If this has been helpful for you, this explanation has been helpful for you, do me a favor and smash that like button. Ladies and gentlemen, I believe in the project long term. A lot of people felt like I was fudding, Olympus DAO because if you got in early, you made a lot of money. And I tried to do the same thing. I ended up pretty much breaking even on it. But I knew long term, we need some sort of decentralized reserve currency in crypto. So I'm a huge fan of this project long term. I think the ecosystem needs something like this. Long term, I'll be looking at this similar to my cold Bitcoin storage, my cold Ethereum storage. I'm not looking at Olympus DAO because it's going to somehow outperform the rest of the crypto market. In fact, I don't think it's going to do that at all. My goal for Olympus DAO is that it becomes some sort of crypto asset that I can hold long term to maintain value. Ultimately, I want to be able to store the majority of my liquid net worth in crypto. I can't be risking it on projects that are brand new. You can't put a significant amount of value in something like that. That's too risky. So I'm hoping something like this creates an investment vehicle that is less risky in the crypto space. I think that's what they're trying to achieve in the market. Let me know what your thoughts are down in the comments below. Thank you so much for watching. Ladies and gentlemen, decentralized cryptocurrency equals freedom. This is Crypto Wealth. I'm out.